Hey traders, Nick here. I wanted to talk to you about managing trades or finding trades based on your own homework versus some expert out there telling you what to do and what not to do. First of all, take out the assumption that they know better than you. They don't if you just spend a few minutes just looking at charts and using logic, and I'll show you today. Perfect example with Goldman Sachs call on the semis. SMH would be a good representation of that. That's Micron, Intel, Nvidia, AMD, etc. So this is the SMH. It's an ETF that mimics the semis, so chips, anything that has technology, which is basically everything. We're using technology more than ever. So long term, these guys are going higher. We're going to need them, and there are only a few providers. So they have been on a tear, big jumps, big moves. So just yesterday, I put out a memo to friends about, okay, caution, there might be some hiccups there just because of what's had happened before. I'm not a genius at finding it. It was right there in the chart. And a little nice surprise this morning is, Goldman Sachs comes out with a note saying that's too much in the semis, we need to take profits, and boom, Micron falls, everything falls. So how could I have seen it? How could you have seen it? So this is a short-term chart, 30 minutes. It shows that they're down big from yesterday's recent pop. So this was the 6th, I believe. So I'm going to switch back to a daily chart. So it shows candles. Maybe go to let's stick with the daily chart. I'm going to zoom in just to eliminate all that noise. And here's what I was watching. So yesterday, I was looking through charts, which I do every day. I came across the semis, and immediately I see this island-looking thing pop and drop. And then I look back and it's like, whoa, that happened before. And I look back and it's like, whoa, that's happened before. So here are 3 situations where we had some sort of a pop and then a complete reversal immediately, and this one had a drag down about this much, and this one has a drawdown about that much, and here starting to draw down. So my question was, is this going to happen? And I put a question mark. I wasn't forecasting it would happen, but that would tell me if I had profits, I'd better book them just in case. And as far as price action, how low can they go? I'm going to zoom in a little bit just to see what recent price action has happened, maybe even more than that. 120. So 2-hour charts. So this is every candle is 2 hours, and I can see that they could fall. And here's another lesson. Where do I put the trigger? I put an alert. In fact, I'm going to do it right here, either on this candle right there or that candle right there. I'm going to be conservative and go lower. Add alert. That's it, and I'll get notified. So I don't do anything unless this gets lost. I don't want to buy hope that they fall. But if I'm long, I would book some, trim, buy puts, whatever. But I don't panic unless I see the levels fail. So yes, it's bad for a couple of days, but we had extraneous circumstances with stupid headlines. Turn off the news. Just play the charts and the P&Ls. You have the P&Ls that tells you the fundamentals. Use the charts and turn off the news for 6 months and you'll be a better trader. I guarantee it. And I don't guarantee it, but I promise you would do better. I do better without the news. Let's put it that way. When I just completely decide, I do listen to the news just to stay in touch, but I completely try to decide based on not emotions, but lines on the chart. This way, hey, my boss, the chart told me to do it or not do it. My boss, the chart tells me don't short it until it loses this, or even that. Depends on how big of a chart short I want to put on and what time frame. And then as far as how far does it go down, well, it has room to fall from one line to the other. So if I shorted it here, I'd say this would be a potential stop. This is where bulls and bears agree. The point of control. They agree on price. It means they fought over it the hardest, the longest. The fiercest battle was around here. So if it falls, this should be support. If not here, it's here. There's a gap down below, but not every gap gets filled right away. So this is how I would, not knowing what Goldman said today, I would have told you yesterday, which I did actually, that there could be trouble just based on that. Where is it? Oh, I close it. That one picture I showed you with the 2 island candles. I saw similar patterns, and markets like to repeat themselves. And then I zoom in to see where the opportunities are, which is what we did here. So I can zoom in further to see even more minute opportunity. Depends on how fast a trader I am. If I'm trading like intraday, then I should be looking at 5-minute candles, maybe a slice of 1, 5, and 15-minute candles, maybe a 30-minute candle, because they have different levels within them. But if I don't and I stay out to 2-hour candles like I was just there, I can see bigger picture, well, relatively bigger picture to say, okay, I don't panic until I see this loss. And if so, then I can buy puts and I can expect maybe a test of this. But if I zoom out on the daily and I say, okay, I believe the markets are going a lot lower, so then I can take a bigger short out in time to say, okay, maybe they go down to 90, which is feasible. If I'm looking at the price action from a longer time perspective, like a few months, say the end of last year, beginning of this year, there's further to go, closer to 92, 91, maybe even 90. So, and by the way, if you're a Fib guy, girl, Fibonacci, this is a mathematician, I believe, and he said that things repeat themselves in the same way, where if you have a rally, they tend to fall to, they have different levels, but one that everybody touts is 50% retracement. You hear that a lot. That's what that means. They go up that much and they give back half of it. If you consider this overshoot, that overshoot, somewhere in the middle lies the truth, saying the same thing. So Fibonacci jargon, put in plain simple English: overshoot lower, overshoot higher. I love it. I hate it. I hate it. No, wait, I love it. I love it. Maybe somewhere in the middle lies the truth. So use logic. Don't play into the hands of headlines. Here's the thing. The media who puts out the headlines is in the business of headlines. They get nobody watching or listening or reading if it wasn't shocking. So I know this because I do write articles. And when I write an article, the headline changes sometimes because I'm not in the business of writing inflammatory articles. I write what I want to write about, and then somebody edits it and say, that doesn't grab enough eyeballs. Nothing bad, but that's how the business works. So when CNBC tells you, are we going to retest the levels that we just saw? They're just trying to get your attention. So don't get shaken out based on a headline. The truth is in the price action and what just happened and what's going to happen likely. So you can't ignore what just happened, even if we're going to retest the lows. They have to go through all of this first. So they can't get to here without going through this, especially on an ETF. Flash crashes can happen, but that can happen any day. So trust in yourself, trust in your ability to read the chart. If you don't know how, learn. It's very easy, it's repetitive, and you can put it in plain, simple English. I just did today. All right, Nick signing out.